Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a journey of investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades. We do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. Today's video we're going to be looking at MMTLP and a review of the share imbalances, including another look at ETrades $25,000 sell order that did not go through, and also reasons why. We're also going to be looking at some more PYPL PayPal, and this is something that looks potentially to be breaking out, so stay tuned for that. So before we get started, let's have a look at what's happening in the market. So first headline here from Reuters, we can see that Wall Street rises on easing bond yields and inflation numbers are on review. So we are expecting inflation news tomorrow, and what Unusual Whales have stated is the stock market could surge an additional 15% by the end of the year in a bull case scenario. Certainly very, very possible. So if we look at what Wall Street is expecting for CPI tomorrow, we can see here overall the median forecast is 0.29% up, with CPI 3.4%. And core CPI at 3.7%. So hopefully better figures than that we see tomorrow. And in other news from stock market news, we can see that Google has expanded in-house chip efforts in a costly AI battle, and this is something that they are obviously working on, hopefully to get a bigger market. And what Walter has stated here is that Alphabet shares are up 1.2% pre-market after Google also unveiled an ARM-based data center processor with a new AI chip. And if we finish off by having a look at Nvidia, again news on Nvidia that was shared in the Discord today. They've just unveiled a new AI accelerator processor called Gaudi 3. And this is supposed to be widely available by the third quarter, and they say Gaudi 3 product will outperform Nvidia's H100 chip. So great news there for Intel. So let's have a look at the ETrades share imbalance and also the $25,000 sell order that did not go through. So shout out here to Rare DD, who's just posted earlier. Looks like ETrades wanted MMTLP shares off their book before the next bridge distribution. In a hypothetical situation, a new buyer could have purchased MMTLP after the 12th of the 8th, which is the 8th of December. They'd be competing with these high prices from ETrades' apparent forced buy-ins. So how many uninformed buyers would have actually bought at these prices? And then on top of that, FINRA would have just not to allow the transactions to clear like they did to obviously avoid the significant costs for the hedge fund. So if we have a look at this and zoom in, we can see all of these prices here and order numbers, and we can also see prices in terms of the actual buy prices, which are, we can see 1,000, 5,000, 4,000, 3,000 and more. So if we move on to the next post there, we can see that Rare DD states these shares of MMTLP sold for nearly $25,000 a share after the 8th of December. But FINRA obviously did not allow that transaction. FINRA claimed the U3 halt was to protect investors. So we know obviously everybody would have been protected buying it at $25,000 because the losses would have been significant. So obviously they have now been protected, and it seems to be that FINRA just wanted to protect short position holders from being forced liquidated and forced to buy in. So obviously we know that did not happen, and what Geo has stated here is over $12 million was stolen by FINRA actions. ETrades sold every share he had, even 5 shares, for under $25,000 a share. So we have a look at the Geo figure here. We can see he had 5 shares at $24,994, and that went through, and it was too late to cancel. So obviously after that we had the U3 halt. So if we get a reaction here from Marduk, who's just seen a sell order for 5,000 shares at $5,000 a share, too late to cancel, and that order alone would have been approximately $25 million. So obviously nobody is talking about this, and it also appears to show that the MMTLP fiasco is by far much bigger than any financial crime in history, including Bernie Madoff. And what Q Entertainment has stated is FINRA, NextBridge and TradeStation have all acknowledged an imbalance publicly, so obviously anybody who does not agree with this is certainly trolling. Finally, I'd like to share a quick reminder of the space chat that is expected to take place Wednesday the 10th of April 2024 at 4:30 p.m. Eastern Time. So shout out here to Danielle, who's shared a link of that space. And for clarity, what she stated is, first of all, this is not to take legal action, it's only to find out what options to have and what deadlines we need to bear in mind. Obviously there could be significant legal deadlines that people may need to be aware of, and it's simply knowledge we look at holding and also consider with regard to employing other strategies. So I think overall it does certainly seem to be a good idea, so we will look forward to that and provide an update once that happens. What now I'd like to have a look at is ticker symbol PYPL, also known as PayPal Holdings. So we're going to start by having a look at the chart for the previous month, and we can see it is up in excess of 12%, and at time of editing up close to 1%, currently at $66.91. So earnings is expected in around about 3 weeks, so it is something that we are looking at carefully. This is also a stock that I have invested in, and I managed to buy in it around about $56.62 when we saw results of the third quarters, which I certainly was very positive about, and I did share that live in the Discord. But let's move on to have a look at first of all the PE ratio. We can see currently we're looking at 12.93. all-time mean is approximately 30.56x, and we look at the FCF's F yield, that's approximately 7.49%, and the all-time average is 4.79%. So we can certainly see it seems to be trading below its fair value. So good potential here, and going forward there could be a chance of 136% more gain in earnings per share. And if we move on to have a look at the balance sheet, we can see here cash and short-term debt approximately $14.606 billion, long-term debt $9.68 billion. But in terms of the overall balance sheet, it is certainly very healthy. Credit rating 13.96x, FFO interest coverage, and the return on capital employed, we look at the latest figure, it is going up 14.8% compared to 2019 12%. So certainly the capital is working a lot better. Return on equity also from 2019 15.2%, currently 20.5%. So certainly moving in the right direction. If we move on to have a look at the revenue, so again compound annual growth rate revenue 15.73%. so comparing 2015 revenue 9 billion and currently very close to 30 billion. So they also have free cash, currently just in excess of $4 billion of free cash with a compound annual growth rate of 11%. So certainly positive news there from the revenue point of view. In terms of share buybacks, we're looking at $1.1 billion. So by reducing its shares outstanding by 9.7%, PayPal have increased the earnings per share by 10.7% should we say. And if we move on to have a look at the margins, the gross margins 39.6%, operating margin 16.3%. Let's move on to valuation. So we're looking at potential, as we saw, 136% more in earnings per share. And if we use something called the Benjamin Graham's 2G rule of thumb, then PayPal has to grow earnings at 6.4% compound annual growth rate over the next 7 years to justify its valuation. So in terms of analysts, we're looking at the analyst in terms of growth rate, $5.13, which is 0.6% year on year, and we're also looking at 2026 estimated $6.11. So again going in the right direction. And finally, if we look at PayPal ending 2026 with $6.11 in earnings per share, then it's certainly moving in the right direction. But let's have a look at a picture of the revenue. So if we look at the revenue in billions here, comparing 2015 to 2023, compound annual growth in revenue is 15.73%, and we know revenue currently now is just in excess of 29.77 billion. So get some reactions now from stock trader Max, who's also posted here PayPal has officially broken out, and it's been in a 3-year downtrend. We have seen that, and obviously it has now looking to be in a strong uptrend. So in terms of fundamentals, they have a new CEO, they have new management, and what Derek has stated here with the ascending triangle and the golden cross, if it stays above $64, which it is, and has resistance at $68, he's going to look for a big breakout on earnings day, and we know earnings is coming very, very soon. And finally, if you would like to get breaking news and also buy and sell alerts, details are in the description below. Thank you very much for watching. Please stay tuned.